This is an interactive video session that will help you improve the skill of assessing individual creditworthiness using digital tools. Having this skill means that you are able to 1. Define the loan purpose and select a suitable loan based on financial ability. 2. Understand what creditworthiness is and why it matters. 3. Understand what affects credit score. 4. Conduct and manage financial transactions related to personal credits and loans through digital means. 5. Understand how to use various digital tools to form transactions securely and efficiently. Step 1. Define the loan purpose and select a suitable loan based on financial ability. First, clearly identify why you need a loan, how much money you require. Then, calculate the exact amount needed to avoid borrowing too much or too little, and check whether the need is short-term or long-term. Ask yourself, what do I need the money for? How much money do I need exactly? Can I cover some of it myself without borrowing the full amount? You must choose a loan that fits your income and financial situation. Always avoid loans that are too risky or too expensive. Following that, evaluate the loan in relation to your monthly income and expenses. Always verify the warning signs such as high interest rates, short repayment periods, hidden charges. Step 2. Understand what creditworthiness is and why it matters. Creditworthiness is a measure of how likely you are to repay borrowed money. It affects whether banks or lenders will approve your loan, credit card, or mortgage applications. Digital tools now make it easier to see your credit status and understand what lenders think about your financial behavior. Your credit score is a number that shows how strong your credit history is. Remember, higher numbers mean better credit. Not only that, digital tools allow you to check this score for free or for a small fee, often with detailed explanations about what the score means. To check your credit score online, you must first use reputable websites or apps provided by banks or credit bureaus. Second, sign up with your personal information and follow security steps, like two-factor authentication, to ensure your data is safe. Another important point is review your score. For example, once you see your score, look for any explanations provided, because many digital platforms offer advice on what each part of your score means and how you can improve it. Consequently, look for free digital tools that will help you monitor your credit history and track changes. In short, these tools can send alerts if there are any changes to your credit report, such as a missed payment or a new credit inquiry. Step 3. Understand what affects the credit score. To begin with, when you use a digital tool or app to check your score, it often breaks the score down into parts. Let's look at each one in simple terms. First, your payment history is the most important part of your credit score. This score shows if you've been paying your bills, loans, credit cards, etc. on time. Second, your credit utilization. This score looks at how much money you're using on your credit cards compared to the limit you have. Your app will always show your credit usage and alert you when it's too high. Third, length of your credit history. The longer you've been using credit responsibly, the better. Lenders like to see a track record. So don't close old credit cards just because you don't use them. It can actually help your score if they're still open and in good standing. Next, your new credit. Be mindful of applying for several credit cards or loans in a short time. It can hurt your score, because it may look like you're in trouble or trying to borrow too much. Finally, having more than one kind of credit can be a good sign. For example, a credit card, a phone payment plan, or a small loan. It shows you can handle different types of borrowing responsibly. Most credit apps don't just show your score, they explain it in simple terms, track changes, and give tips to improve. Step 4. Conduct and manage transactions related to personal credits and loans through digital means. First, get familiar with digital platforms. Visit your bank's website or download their mobile app. Check balances and payment schedules regularly. Track payments and review transaction history to avoid missed payments and fees. Setting up auto payments and double-checking the setting will prevent late fees. Another important thing not to forget is adjusting your payment plan, which means if your financial situation changes, you must look for options to reschedule or reduce payments. As the next step, focus on regularly monitoring your credit score to spot inaccuracies or identity theft. Take action immediately if you see unfamiliar charges or inaccuracies. Remember to always use the in-app customer support to resolve issues and keep records of any communication for future. Step 5. Understand how to use various digital tools to form transactions securely and efficiently. The key to successful digital transactions is not just speed, but also security. Follow these steps to become proficient and confident when using digital tools. To begin with, choose the right digital tool. Take the time to research and identify the best tools available, such as mobile banking apps, e-wallets, or online payment platforms. Always compare features, security protocols, and user reviews, and always use official app stores to ensure safety. But never download financial apps from unverified sources. Secondly, set up secure methods to verify your identity when accessing digital accounts or performing transactions. Thirdly, before confirming payments, double-check details and verify recipient information. Fourthly, check your digital financial history regularly and set up notifications to get real-time alerts for every transaction. Good luck with managing your credits and loans using digital tools.